All right, welcome. Hi, my name is Paul Gore, Director of Community Development for the Asian Chamber of Commerce, Houston. Welcome to our first executive series, April 2nd, 2020. The Asian Chamber has been monitoring the COVID-19 situation since January, affecting our Asian business here in Houston, and happy to put together a wonderful webinar with Seyfarth Shaw to discuss the CARES Act recently passed by Congress. We are an organization celebrating 30 years helping the Asian business community to foster economic trade among our members. And this is a crucial topic about resources that can help your business stay afloat through this uncertain and trying times. But before we continue with the webinar, I'd like to provide some housekeeping items. We'll be having a Q&A session at the end of the presentation, so you can ask questions through the Q&A button at the control panel located on the lower portion of your screen. If you have any questions during the middle of the presentation, please submit your questions there. We'll try to answer all your questions, but please forgive us if we're unable to answer the questions because of time constraint. Just want to make sure you know about that ahead of time. The PowerPoint and presentation will also be made available at our website at the end of the webinar. So please stay engaged and do not worry about taking notes. We'll be happy to, want to make sure that you're able to focus because of a lot of information that we covered in a short amount of time. So in continuing with the webinar, I'm going to pass the mic to your presenters, Adam and Sai.
Hi, this is Adam Laughton from Seyfarth Shaw. We're really grateful and excited to be with all of you today. This is something that we have been keeping an eye on for the past several weeks, even before the CARES Act was actually a thing, knowing that our clients and prospective clients and a lot of other business owners and employees would be very interested in whatever Congress was putting in place to deal with this really unprecedented situation. So just to get started, my name's Adam Laughton. I'm a partner at Seyfarth Shaw here in Houston, and I'm joined by Sai Pidatala, Senior Counsel, also here in our Houston office. Both of us have been very involved in keeping an eye on everything coming out of Congress in the past couple of weeks and working with clients on sort of preparing how they're responding to the disruptions that they're experiencing in their businesses and how to take advantage of all those resources. I won't spend a lot of time on this because we finalized these slides this morning with information about confirmed cases and deaths, and it's likely that this is already outdated even as we speak. But I think everyone's aware that the current pandemic has a very wide coverage, including many areas here within the United States, and only for the time being appears to be growing. So, it's not just a U.S. problem. It's not just a China problem or an Italy problem. Those places that seem to get the most media attention, but there are really hot spots popping up all over the place. We have at Seyfarth's website and have been publishing for the past several weeks many pieces which I think many folks on this call would find very useful in terms of resources on things that are happening here in the state of Texas, something that I've particularly been keeping an eye on, as well as things coming out of Congress. You can find it at this URL. As Paul mentioned, we'll be making these slides available at the end of the presentation for you to be able to go back. But if whatever industry you're in, if it's hospitality, construction, healthcare, you can find resources there that point not just to the CARES Act, but to all the things that came before it, as well as some things that are industry specific or coming out of the state of Texas. So I really encourage you, there's a mailing list you can sign up for. So you get these regular updates as new things roll out. We do not anticipate that the CARES Act is sort of the end of the road, but is sort of a down payment on a larger response that will be coming forth. And it still remains to be seen, for example, what actions might be taken by some of the states. The main thrust of our webinar today is going to be focused on the CARES Act, actually the Coronavirus Aid Relief and Economic Security Act. Congress loves these cutesy little acronyms, and so we have the CARES Act, and that's all that anybody refers to it as anymore. And our focus is going to be on what is in here that is of interest to business owners and how can they take advantage of it. The way that these sorts of stimulus bills or other types of bills work in Congress is that just a mountain of things get thrown into them. Everybody has their little pet project that they want to toss in there, some of which has very little to do with coronavirus or with pandemic relief, but this is just an opportunity to slap your little pet issue in here. And so there's a lot of things in here which may or may not be related to coronavirus, may or may not be related to economic stimulus. And we've tried to focus on those handful or maybe two handfuls of issues which are of most interest to this community. Obviously, it's an 800+ page bill. We're not going to be able to go into great detail on every single thing. That's a great place for you to ask questions through the Zoom mechanism. Also, our contact information will be included in this presentation. If you want to follow up separately for a longer discussion, we can certainly do that as well. And so you see the slide that's available right now is sort of our agenda. I hope to not get into the practice of simply reading to you what's on the slides that you can read for yourself. But these are some of the main topics that we're going to tackle as part of this. Again, we can't get into everything. There's some stuff that we'll mention at the end, sort of as a miscellaneous set of topics, but we hope this will cover most of the main areas that will be of interest to the business community and folks who own businesses and trying to figure out how to help their businesses survive and thrive in the current economic situation. So with that, I think we'll start off. This is Title I, Small Businesses. What a lot of you will be interested in, the Paycheck Protection Program, and I'll turn it over to Sai.
Thank you very much, Adam. I do appreciate that. For those of you who have patched in, just by way of quick intro, my name is Sai Pidatala. I am one of Adam Laughton's colleagues here at Seyfarth Shaw. So I'll just begin by saying, I want to reiterate what Adam mentioned. We're going to do our best to go over some of the more pertinent topics as related to the CARES Act today, and to the extent you'll have questions at the end of our presentation, we'd be happy to field them. And of course, please do keep in mind that a lot of this information is still coming out. It's still being further clarified. So to the extent that we don't have a pointed answer to your question immediately as of this moment, of course, we will get back to you, especially if you leave with us your contact information or if you reach out to us. I will also, before I delve right into the Paycheck Protection Program, which I'm sure a lot of you are very interested in hearing, I'll preface my remarks by saying that while we're going to talk a lot about the federal stuff that's going on, the stimulus bill and federal monies, loan monies, and grant monies being offered at the federal level, there is a lot happening at the state level. I believe Adam may touch upon some of the things going on in Texas towards the end of the presentation, but suffice it to say that the Texas Governor, Greg Abbott, has issued recently an executive order implementing essential services and activities protocols for the entire state of Texas. These protocols direct all Texans to minimize non-essential gatherings and in-person contact with people who are not in the same household. And we can sort of get more granular into that as we get towards the end of the presentation. I'm now going to pivot a little bit now and delve right into the meat of the first topic here, which is the Paycheck Protection Program. The Paycheck Protection Program, commonly referred to as PPP, that's the acronym for obvious reasons, authorizes up to $349 billion in forgivable loans to small businesses to pay their employees during the COVID-19 crisis. These loan amounts will be forgiven as long as, 1, the loan proceeds are used to cover payroll costs and most mortgage interest, rent, and utility costs over the 8-week period after the loan is made, and 2, employee, and compensation levels are maintained. All businesses, including nonprofits, veterans organizations, tribal business concerns, sole proprietorships, self-employed individuals, and even independent contractors with 500 or fewer employees can apply. Again, I want to reiterate the number 500 or fewer employees because that's a critical sort of a number to keep in mind when thinking about whether or not you are eligible for a PPP forgivable loan. And businesses in certain industries can have more than 500 employees, but only if they meet applicable SBA employee-based size standards for those industries. So there are exceptions to this 500 rule, but it depends on which industry, which business you're in. And that gets into further detail, which can be answered based on whether or not you fall into one of those exempt or accepted categories. The PPP waives the usual SBA requirement that businesses try to obtain some or all of the loan funds from other sources. So that's good news. You're not forced to go somewhere else before you can come to get your money from the PPP. For this program, the SBA's affiliation standards are waived for small businesses in the hotel and food services industries that are businesses that are considered franchises, and businesses that receive financial assistance from small business investment companies licensed by the SBA. And as is indicated on the slide, additional guidance from the SBA is going to be released as appropriate as we go forward, as we move forward with the PPP program. And I'll just say this one thing real quick before we move to the next slide. I've spoken unofficially and off the record to a lot of my personal contacts who work at SBA approved lenders and banks. And a lot of them are telling me, hey, Sai, the PPP program, businesses are going to be eligible to start applying for these loans as of tomorrow, April 3rd. But that's just the first sort of critical date. The next Friday following tomorrow will be when self-employed individuals and those who are 1099 recipients, that will be the date upon which they will be able to apply for money out of this $349 billion pot. Now, as you can imagine, and this is no secret, I think I read somewhere that banks and the government in general is expecting upwards of 200 million applications in the first wave. So everybody's going to be rushing to apply to get money out of the till. As you can imagine, it's going to probably be very frenzied and chaotic. So it's going to be very important that as an applicant, you fill out the proper forms and you follow the process and the method properly and timely. And of course, there will obviously, as is the case with all of these types of programs in history, there will be a lot of fraud. So I'm sure the government and banks and lenders are going to be extra vigilant to make sure that they root out any fraud. Next slide, please, Adam. Thank you. Payroll costs under the PPP are capped at $100,000 on an annualized basis for each employee. Loan payments will be deferred for 6 months. These loans are 2-year loans, by the way. Businesses may apply through any existing SBA lender or through any federally insured depository institution, federally insured credit union, and farm credit system institution that is participating. Other regulated lenders will be available to make these loans once they are approved and enrolled in the program. So if you're a potential applicant, we highly suggest that you consult with your local lender, at least as a first sort of port of call, and obviously talk to an attorney if you need help navigating all of this. But your first kind of item to really investigate is whether or not your lender is a participating lender. And you can even visit the Small Business Administration at www.sba.gov for a list of SBA lenders. As I mentioned earlier, due to a likely high volume of applicants, it's anticipated that not more than 25% of the forgiven amount of these loans may be for non-payroll costs. Next slide, please. So here, we're basically, this slide just talks about underwriting is based on the impact of the coronavirus rather than borrowers' ability to repay. And this is cutting to the spirit of this legislation and what the government is really trying to do. I mean, this is a bailout piece of legislation. It's being sort of approved under compelling circumstances. And of course, the idea here is to help the United States and to help its citizens and its businesses. And the second point is regarding eligibility for loan forgiveness. So although the program is open until June 30th, 2020, the SBA does encourage eligible businesses to apply as quickly as possible because, as I mentioned earlier, there is a funding cap and lenders need time to process your loans. It is also worth mentioning to everyone on the call that the PPP program does not require personal guarantees on the loans. Of course, however, if the proceeds are used for fraudulent purposes, the U.S. government will pursue criminal charges against you. And before I switch off and sign off and hand the mic back to Adam, I will say that, a lot of people have asked me over the last couple of days, what do I need to apply for a PPP loan? And the answer is, there's a PPP loan application. It's not a complicated form. It is available publicly, and applicants need to submit the application with the required documentation to an approved lender that is available to process the application. So I would strongly suggest that you look online to access that form, that application. One of the items on the application that has caused a lot of concern for a lot of applicants, at least clients of mine, there are a lot of companies that are based in the US that have a foreign owner that owns 20% or more of that company. According to the Paycheck Protection Program application form, that foreign owner, whether it's an individual or an entity, has to disclose its social security number, or if it's an entity, it has to disclose its EIN number. So in many cases, individuals and companies that are foreigners won't have social security numbers or EIN numbers. And the question is, well, what do I do? How do I fill out the form? The quick answer to that is you may still be eligible to get PPP loan money if you have foreign owners. You're not disqualified, but the answer to the question is you have to really speak to the SBA qualified lender to see what the lender may ask in particular in respect of these foreign owners. So that's kind of an answer, but it's kind of not an answer because I don't have the exact specifics for you. But the idea is that if you have a foreign owner, don't be afraid to apply. You're not disqualified. You may still be eligible. Thank you. Adam.
Yeah, and I was just speaking before I got on this call with somebody who's in that exact situation. It's sort of a foreign parent of a U.S. subsidiary. And the intent here for Congress is to push out as much money as possible and as quickly as possible to support as many jobs as possible. And so I would be very surprised if either there's not further lawmaking from Congress or rulemaking by the SBA that fleshes out some of these questions that we have. The SBA has just not had time to get all that done. I mean, it had this huge mandate dumped on its lap a week ago. And I mean, months, or these rules generally take months to develop. Now, I don't think that'll be the case here because they just don't have months to spend on it. But it's not something that you can, polish overnight. So we'll be keeping an eye on that, and you should as well, because I think some of these questions that we have where it's, well, we don't know exactly how this will be treated, you should go ahead and apply for the loan and just, get in the queue. Some of those questions will be resolved at a later date. I wanted to talk about a couple of other loan programs that were in this Title I. I'll actually start on the right this time, the Economic Injury Disaster Loan, or if you want to give it a funny pronunciation, the EIDL. EIDLs are different than PPP. They can be used for a much broader set of purposes. So let's say, for example, you run some sort of shipping company and you had a shipment come in on, some sort of refrigerated truck, but your workforce had to be furloughed or were under quarantine for some reason. And so the food or whatever that was in the refrigerated truck spoiled, and that was a loss for you. So the PPP would not cover that because it's only payroll. An EIDL would. Again, it's a mostly going to be small businesses, sole proprietorships, independent contractors, private 501c3 nonprofits, and small agricultural cooperatives, very similar or the same standards as under the PPP. These are actual loans. They're low interest loans. They go up to $2 million. but it's not a, the PPP is a loan which can be converted into a grant, meaning you don't have to pay it back if you meet the conditions. The EIDL is a loan, period. You're going to pay it back. Now, there are options for the SBA administrator to defer those loan payments, but it is a loan. It is not a grant. The other thing to be aware of is when you apply for an EIDL, and the application materials for this are not available yet. This isn't quite as urgent a process as the PPP. There's a place you can check, a box you can check on the form, which will get you a $10,000 emergency grant. It's essentially an advance on the loan, and that is paid out in 3 days after you submit the application. So that is sort of emergency money. If you need to just keep the doors open, here's 10 grand. It's going to get there in 3 days. Even if you don't ultimately qualify for the EIDL loan, that $10,000 does not have to be repaid. I mean, again, even though the EIDL itself is a loan and has to be repaid, this smaller amount, this $10,000 grant, really is a grant. It's an advance on the loan, and even if you don't ultimately get the loan, you still get to keep grant money and don't have to repay it. Unlike the PPP, for the EIDL, you do have to demonstrate that you cannot get credit from a more traditional source. So, I've gone to several banks and applied for a line of credit, and they denied me. Okay, now I'm applying for an EIDL. So that will be part of the documentation process. The other one over on the left, the Small Business Debt Relief Program. This is really for those if you already have an SBA loan. This isn't a PPP. It's not a disaster loan, which, some of you may have had, after Harvey or Imelda. If you have one of these loan programs and you already have a loan with the SBA, you can apply within 6 months after this CARES Act was passed for one of those programs. Again, not a PPP, not an EIDL or a disaster loan. Then SBA will make the payment for 6 months. After your next payment is due, they pay the principal, the interest, fees, and everything, just giving you a little space to breathe. They'll make those payments. It's not total loan forgiveness, but it just gives you some time to get your business back on your feet, get your employees back in the door before you start having to make these loan payments again. So a lot of people have asked, can I get both a PPP and an EIDL, even though they're for different purposes? The answer is yes. You can get the same one, or you can get both programs. You can get 2 loans or a grant and a loan, depending on how you look at it. But you cannot use them for duplicate purposes. So if you apply for a PPP to cover your payroll in 1 month, you cannot get an EIDL and then, as part of your loan application, submit to be granted the loan for those same amounts. If you get an emergency grant, that $10,000 that I talked about under an EIDL, that's subtracted from your debt forgiveness under PPP. Otherwise, it would be double debt forgiveness. They're forgiving you the $10,000 because you don't have to repay that, and then they're forgiving the PPP. So you'd have to play around with those numbers and see how it works. So the example here that I've given is if you take an EIDL loan and you use it to cover April payroll, you can't claim loan forgiveness for those same employees the same period. If you don't get enough of an EIDL loan to cover all of your employees, so maybe if you've got multiple departments, you've covered 2 departments, there's a 3rd department whose payroll you didn't get covered, you get an EIDL to cover that. Now those are mutually exclusive. You can claim the full PPP loan forgiveness for those 2 departments, and you get the EIDL loan for the last one, or for different months, payroll in March, payroll in April, 2 different loans. That's fine. You can't just, you just can't get a PPP for March and then go to EIDL and say, my payroll costs in March for this, I need a loan for that amount. That's not going to be possible. And because these all run through the SBA and the SBA lenders, they'll be able to sort of tag people who are trying to double dip into the system. As Sai pointed out, the PPP loan materials are already out there, and it's a fairly simple application. So if your banker, your lender that you already have is an SBA lender, that's the place to start. It's a fairly simple application. They can point you in the right direction. Or there are resources at the local office of the SBA or at a local small business development center. You can also check the SBA website. Finally, here under Title I, there's some bankruptcy relief. Some folks, even with the loans and the various other types of relief, just aren't going to be able to make it. And so the bankruptcy code is having a little bit of leeway added into it for those folks that just can't quite make it. The debt cap that could be forgiven under a Chapter 11 fast track reorganization has been up to 7.5 million from 2.7. That's a lot. That's going to mean a lot more people qualify to do a Chapter 11 as opposed to a Chapter 7, which is just a dissolution, a complete discharge, which will give you the chance to continue operating and stay on your feet. And then there's a lot of things that we'll see under the tax code, including how do debt payments and bankruptcy claims figure into individuals' taxes. And that's really, if you find yourself in that situation, that's a good discussion for your CPA if you're sort of feeling on that knife's edge of, should I do bankruptcy? Should I apply for a loan? Which should I do? It may depend on your individual sort of financial and tax circumstances as well. So Sai, back to you for Title II, the individual tax rebate.
Great, thanks, Adam. I think that was very, very incisive and is very important information, especially when Adam was talking about the difference between understanding the grants and the loans and how each are triggered and how one cannot double dip. Moving on to Title II of the CARES Act. This portion of the legislation deals with eligibility for refundable income tax credits. So here I want to speak very briefly about rebates available for individuals. All U.S. residents under the CARES Act, under this portion of the CARES Act, with an adjusted gross income of up to $75,000, and this is $150,000 if you're married, filing jointly, who are not a dependent of another taxpayer and have a work-eligible Social Security number, they're eligible for the full $1,200 rebate, and that number is $2,400 if you're married filing jointly. In addition, you're eligible for an additional $500 per child. So this is true even for those who have no income, as well as those whose income comes entirely from non-taxable means-tested benefit programs, such as Social Security benefits. For the vast majority of Americans, no action on their part will be required to receive a rebate check. So again, there's nothing you need to do as an individual to trigger all of this. It's going to happen automatically. The IRS will use your taxpayer 2019 tax return if filed already, or in the alternative, if you haven't filed your 2019 tax return already, then the IRS will rely on your 2018 return. This includes many low-income individuals who file a tax return in order to take advantage of the refundable earned income tax credit and the child tax credit. The rebate amount is reduced by $5 for each $100 that the taxpayer's income exceeds the phase-out threshold. The amount is completely phased out for single filers with incomes exceeding $99,000 and $146,500 for head of household filers with one child, and $198,000 for joint filers with no children. So again, the point here is there are individual income tax credits and credits in relation to dependents, namely children, that are available to individual income tax filers. And these are based on certain gross adjusted income thresholds, but there are caps. So, if you're making a lot of money, obviously the more you make and the more you report, the less you're eligible for. The idea being here to help those that make lesser amounts in their salaries. The Treasury Department and the IRS has announced their intentions to begin these distributions within the next 3 weeks. So this is definitely underway. Next slide, please. Here I want to discuss student loan exclusions. This topic may or may not be relevant to a lot of you. Of course, there are a lot of Americans, borrowers who are still paying their student loans and who have been in the workforce for a number of years. So to the extent that this does apply, it's very important to know a little bit about how the CARES Act touches upon student loans. The relevant portion of the CARES Act enables employers to provide a student loan repayment benefit to employees on a tax-free basis. This is in relation to employers that have been paying for school. Under the provision, an employer may contribute up to $5,250 annually towards an employee's student loans, and such payment would be excluded from the employee's income. So that's important to note. That $5,250 cap applies to both new student loan repayment benefits as well as other educational assistance, for example, with respect to tuition, fees, books, etc. The provision relating to student loans applies to any student loan payments made by an employer on behalf of an employee after the date of enactment and before January 1st, 2021. So the deadline here is up to January 1st, 2021. Next slide, please. Here, just real quick, since we're on the topic of tax, which I know is a very exciting topic for everyone, I'm being sarcastic, but it's still worth glossing over how there are tax-related effects on retirement plans. So, consistent with the previous disaster-related relief, this particular provision of the CARES Act waives a 10% early withdrawal penalty for distributions up to $100,000 from qualified retirement accounts for coronavirus-related purposes, and only if made on or before January 1st, 2020. So in addition, income attributable to such distributions would be subject to tax over 3 years, and the taxpayer may recontribute the funds to an eligible retirement plan within 3 years without regard to that year's cap on contributions. Next slide, please. So here, I just wanted to chat very quickly touch upon charitable contributions, especially as they relate to taxpayer deductions on income tax returns. With respect to these so-called super deductible contributions, what's going on here? Well, the bottom line is this legislation encourages Americans to contribute to churches and charitable organizations in 2020 by permitting them to deduct up to $300 of cash contributions, whether they itemize their deductions or not. So what you're seeing here are increases in the limitations on deductions for charitable contributions by individuals who itemize, as well as corporations. Now for individuals, the 50% of adjusted gross income limitation is suspended. For corporations, the 10% limitation is increased to 25% of taxable income. This provision also increases the limitation on deductions for contributions of food inventory from 15% to 25%. Contributions to supporting organizations, donor-advised funds, and most private non-operating foundations, however, are not eligible for these super-deductible contributions. So it's important to know this because a taxpayer like you could effectively zero out your taxable income for the year by making qualified contributions and carrying these contributions over to future years. Passing the mic back on to Adam to move on to the next topic here, Title II, Business Tax.
Right. So the individual tax rebates have gotten a lot of the media attention, and I think everybody has probably checked one of those calculators that's available out there to see how much they think they might get. But the Act also contains some business tax changes. So consistent with Congress's goal of keeping as many Americans employed as possible, there is an employee retention tax credit. And it is this is important, a refundable tax credit for employment taxes of 50% of qualified wages up to $10,000. So for each employee, if they get paid at least $10,000, you get a $5,000 a year credit to employment taxes for that employee for the year. Now, there are certain requirements that employee, was still paid and the employee, but even though the employee was being paid, they couldn't work because of, either there's a stay-at-home order, or they were quarantined, or they were a primary caregiver, to a child who's home from school, and the employer had to shut its business either partially or fully. You could think of some of the restaurants, even here locally, that have gone from being mostly dine-in to being takeout. That may not require as many employees, so some employees may have been lost as a part of that. Or if their quarterly gross receipts are less than 50% of gross receipts from the same quarter of the previous year. So the business is fully open, but year over year, gross receipts have declined more than 50%. And so if you do that, there's a slightly different formula based on whether you have more or less than 100 employees, and whether you can include other benefits and other payments you make to the employees. But there is that tax credit. So individual employees will get a tax rebate. The employer can also claim a tax credit in addition to other benefits available through this tax credit. There's also a deferral on the employer portion of payroll taxes. So that's your FICA, Medicare, Medicaid, Social Security contributions, 6.2% that you make. Any of those taxes for 2020, you can divide up and pay in two installments, one at the end of 2021 and one at the end of 2022. So essentially, you're going to get a tax credit, but you're also not going to pay employer payroll taxes during 2020. You can defer those into the future. I did include this at the bottom because this plays into the other things that we've talked about. If you get a PPP loan / grant / loan forgiveness, you cannot use this tax credit or payroll tax deferral. So one of the exercises that everyone will need to do is be done fairly quickly, because again, as I pointed out, the PPP applications open tomorrow, is which would be more advantageous for you based on where your business is now, how many employees you have, and what your prospects are for them for the rest of the year. For some people, it will be better to take the tax credit or defer the payroll taxes. For some folks, they need to really take the PPP, but you can't take both. And so, sit down with, whoever keeps your books, with your CPA that does your taxes, and talk about which would be more advantageous, at least for the next 2 or 3 years, because you see that's when you can sort of defer some of those payroll taxes if you're able to keep people employed. There are also modifications to how alternative minimums, net operating losses are carried forward, carried back, and the deduction of interest expense has increased over time, even for those that have not filed yet in 2019. Sai already pointed out corporate charitable tax contributions, the way that you can depreciate property, particularly in the retail sector. We won't get into every aspect of this. Some of you will just, even in spite of the PPP and the EIDL and the other programs that are available, will not be able to keep all of your people employed. Or some of you, even if you are in that position, you'll still have family members who are laid off. And so, one question that's relevant to business owners is what is going to happen to all those people? So that's what unemployment insurance is for. That moves us into Title II, Subtitle A. UI, and this is true even in non-pandemic, non-disaster terms, is always administered by the state governments with federal guidelines, but there's some variation. Meaning each state's unemployment benefits are different, and that allows for things like certain state priorities, how it interacts with other state programs, and differences in the cost of living. In Texas, the maximum benefit you see here is for 26 weeks at a maximum of $521 per week. You can get less based on if you make less, but that's the maximum you get no matter how much money you make. The CARES Act adds some time onto the maximum benefit, anticipating that people will be out of work for an extended period of time, and then adds on an extra $600 a week, but just up until July 31st, 2020. So if somebody has the maximum benefit, they can potentially get, $1,100 a week through the end of July. After that, it would go back down to the old cap for the remainder of that period. Independent contractors and gig workers can take advantage of this. Even if you do have some wages, not your full amount of wages that you had prior to being unemployed, but you're able, you pick up another job, part-time, or you mow some lawns, or do some contractor work from home, you can still get partial benefits. Each state's formula for calculating it is different. And then there's another program on top of that called Federal Pandemic Unemployment Assistance, TUA, which was not available previously. And this is for people who did not traditionally qualify for unemployment insurance, like independent contractors and gig workers. It applies to a broader set of people. There's a very long set of criteria of you have to be able to trace your unemployment to something related to the COVID-19 pandemic. So, I traditionally independent contractors or gig workers say, oh, unemployment insurance, I can't get that. I'm not an employee. So there's another program to look at. They still need to look at whether they qualify for the criteria, but there's a lot of unemployment assistance available out there right now. Sai, do you want to talk about the labor stuff?
Yes, sure. So here, as you can see on the slide, I just want to talk a little bit about this topic, labor. It's a loaded topic. I mean, I don't think labor is the correct way of titling it, but a lot of this falls under that umbrella, among other umbrellas. So the CARES Act allocates $360 million to the Department of Labor. Now, what is that money earmarked for? $345 million is designated for what's called the Dislocated Worker National Reserve, and that's basically a pot of money that is going to be used to bolster the response of states and communities to COVID layoffs. So that's state-oriented. $15 million of that $360 million is going to be designated for the DOL to use for its programs to implement paid leave and emergency unemployment insurance, as touched upon by Adam, the stabilization activities. So that's just a point of information for everyone to know, because there's a lot of money at stake here, and it's just important to know where a lot of those funds are being diverted. And and the purpose of this presentation is to really speak at a high level on what's happening at the federal level. But as Adam alluded to earlier, there's going to be a lot more to come, both at the federal level and, of course, at the state level, because as the states start getting access to this federal money, the states will now have to have their own systems and processes and mechanics in place to make sure that this money gets to the right people and to applicants within the state. Next slide, please. So the Act creates a limitation stating that an employer shall not be required to pay more than $200 per day and $10,000 in the aggregate for each employee under the specific section of that Act. It also creates a limitation stating that an employer shall not be required to pay more than $511 per day and $5,110 in the aggregate for sick leave, or more than $200 per day and $2,000 in the aggregate to care for a quarantined individual or child for each employee under this section. Further, the Act provides that applications for unemployment compensation and assistance with the application process, to the extent practical, be available in 3 ways: in person, by phone, or online. So again, the federal government is expecting a large amount of traffic when it comes to this and on this front. Next slide, please. This is just a continuation of what I was speaking of before. It's important here to note that the Act allows an employee who was laid off by an employer March 1st or later to have access to paid family and medical leave in certain instances if they are rehired by the employer. The employee would have had to work for the employer for at least 30 days prior to being laid off, however. And the Act also allows employers to receive an advanced tax credit from the Treasury Department instead of having to be reimbursed on the back end. So this creates regulatory authority to implement the tax credit advances. And last but not least, with respect to federal contractors, the Act ensures that federal contractors who cannot perform work at their duty station or telework because of the nature of their jobs due to COVID, that these individuals can continue to get paid without interruption. Next slide, please. So here, the Act, this is a little bit more technical. I'll speak a little bit about this, but basically the slide speaks for itself. I just wanted to sort of mention to you that the Act amends certain parts of federal law to provide the Department of Labor the ability to postpone ERISA, which is another piece of federal legislation dealing with labor and employment, to postpone those deadlines for a period of up to 1 year in the case of a public health emergency, and this qualifies as a public health emergency. And then there's more in the Act which talks about single employer pension plan companies, and the idea is that these companies have been given more time to meet their funding obligations by delaying the due date for any contribution otherwise due during 2020 until January 1st, 2021. So there you see again the bellwether January 1, 2021 date appearing. And so I think we can kind of move on from this topic to the next slide. So here I wanted to speak, I know that we're running up on time, so I might skip a few slides here. A lot of the information on the slides is relatively self-explanatory, but the point here is to discuss the Coronavirus Economic Stabilization Act of 2020, which is a part and parcel of the CARES Act, but it's technically a separate act. It appears in Title IV of the CARES Act. And basically this Coronavirus Economic Stabilization Act, it applies to businesses who don't receive sufficient economic relief in the form of loans or grants or loan guarantees elsewhere in the stimulus package. So if you don't qualify for getting any of these any monies from the government from other parts of the CARES Act, then you can look towards this part of the CARES Act. And here you have to be an eligible business in order to qualify to get loans or loan guarantees from the federal government. And this part of the Act defines an eligible business as a United States business that has not otherwise received adequate economic relief in the form of loans or loan guarantees provided elsewhere in the Act. Interestingly, there's also language in here which talks very specifically about the President of the United States, the Vice President, members of Congress, and any of their close family members from reaping benefits from the Act as well. So I think the purpose there is to make sure that Congress and the President, but particularly the President and his family, they don't get to take advantage of these monies. This part of the Act provides $500 billion to the Treasury's Exchange Stabilization Fund. And the purpose of this fund is to provide loans, loan guarantees, and other investments distributed through direct and indirect lending, as I've mentioned before. Now that direct lending includes $25 billion for passenger air carriers, eligible businesses that are certified under Part 145 of the Code of Federal Regulations that deals with air travel, and basically companies that are approved to perform inspection, repair, replacement, or overhaul services and ticket agency services in relation to passenger air carrier and the airline business. It also earmarks $4 billion for cargo air carriers and $17 billion for businesses that are important to maintaining national security. Next slide, please. And then I think we can go to the next one as well. Right, so here, I just wanted to, in the interest of time, skip to a couple of important points. I did want to talk about indirect lending and direct lending under the Treasury's Exchange Stabilization Fund, but a lot of that information is public and is very matter of fact. You could glean that from the prior slides. On this particular slide here, I just wanted to touch upon this idea of temporary relief and what that really means. I wanted to unpack that concept. So this portion of the CARES Act basically requires that furnishers to credit reporting agencies who agree to account forbearance for borrowers or have agreed to modified payments with respect to an obligation or account of a consumer or a borrower that has been impacted by COVID. This part of the legislation makes it such that they have an obligation to report the borrower as current or as the status reported prior to the accommodation during the period of accommodation unless the consumer becomes current. So that's a little bit of legalese here, but the bottom line is that creditors have to report as current for a certain period of time certain accounts for which the creditor has furnished a coronavirus-related forbearance or modified payment obligation. So again, this is relief for borrowers, for consumers, for individuals. The Act also removes lending limits on certain non-bank financial companies and institutions, and most importantly, it permits temporary delays in measuring credit losses on financial instruments, and it enhances corporate credit unions' access to more liquidity at the federal government level to meet liquidity needs. So the bottom line here is that to individuals, to small business owners, rest assured that a lot of money, substantial amounts are being earmarked for relief programs, both at the individual level, but as you can see from here, also at a structural, company-wide, enterprise-wide level. I think next slide, and I'm not sure, Adam, if the next one is yours or mine. Oh, yeah, that's mine as well. Here, I just wanted to talk very quickly about mortgage-related provisions. The slide is self-explanatory. Again, I'm going to gloss over it in the interest of time, but you'll see that if you have a mortgage, then you should know that there's a 60-day prohibition on foreclosure on federally backed mortgage loans. Of course, there's a 90-day forbearance limit for multifamily borrowers. And then there is a 120-day prohibition on landlords initiating certain types of legal actions against tenants, where those properties are subject to mortgages, of course, from federally backed mortgagees. And there's a 180-day forbearance for borrowers of federally backed mortgage loans with the coronavirus-related hardship. So if there's a mortgage involved and you're paying a mortgage, there is relief at that level as well. Next slide, please. Here, I think I glossed over this topic a bit earlier. This is again relating to indirect lending. The Act directs the Federal Reserve to implement stabilization efforts targeting nonprofits and businesses between 500 and 10,000 employees. So in addition to those direct lending requirements, which I had mentioned earlier, there are indirect lending requirements as well. But recipients of this funding have to satisfy certain stringent criteria, and that criteria include the fact that the funds have to be used to retain at least 90% of the borrower's workforce, including full comp and benefits through September 30th. And also for the loan duration plus 2 years, the borrower may not outsource or offshore jobs, and the borrower must abide by all existing collective bargaining agreements. So you cannot go beyond the confines of any kind of labor union agreements that exist currently. Next slide. And then you can just kind of skip to the next one as well. Bottom line here, folks, is that the Federal Reserve has programs that are meant to help, both small businesses and individuals. The second bullet point here is of particular salient. It's related to what's called the Main Street Business Lending Program. Now, the details surrounding this program and its sort of granularities are still coming out, but the idea is that this particular program targets eligible small and medium-sized businesses in addition to the SBA programs like the PPP or EIDL, which we mentioned earlier in our presentation. So the details regarding the Main Street Business Lending Program, for example, are still to be determined and are coming out as we speak. And we here at Seyfarth will be on the front lines ready to disseminate that information as soon as it becomes ready to the public. With that, I will hand the baton back to Adam for the next topic.
Right, and just wrapping up, we'll go very quickly. I mean, one of the things that always happens in, what is not just a public health, but now an economic disaster across the country is state tax revenue is hurting. States are spending money on public health efforts and other things, but they're, because businesses are collapsing, because people are getting fired, they're not taking in as much tax revenue. And so there's some money that is reserved, it's $150 billion, to pay directly to states and territories based on the effects that they experience, and the money that they spend on coronavirus response efforts. So, I mean, I know just yesterday the mayor of Houston announced they were going to go around to all the public parks and take down the basketball hoops so people would stop gathering and playing basketball at public parks and violate social distancing guidelines. Well, that costs money to pay those people to go do that. So that's an expense that the City of Houston and the State of Texas claim under this relief fund. Here are some of the descriptions. As I said at the beginning, there's always a lot of things thrown into bills like this. Everybody's got an idea that they think, has just been waiting for a bill like this where it can just sort of sail through. It wouldn't survive on its own, but it's attached to a big thing. It's going to go along. Here's a list of some of the things that are in there. There's a lot about medical supplies, telehealth, the Medicare program, additional funding for hospitals, job training and workforce development type resources, and then payments to schools. Schools are obviously, like state and local governments, another one of those areas that's really suffering right now with all the school closures. So there's some several billions of relief for local state schools and colleges, institutions of higher learning, tied both to their own finances and assistance that they're providing to students. It's still just wrapping up, still unknown what states are doing. States don't have the same ability to run deficits that the federal government does under our federal system. And so, a lot of what they do might be in the realm of tax credits or something of that nature. Obviously, Governor Abbott has been active with a lot of emergency orders, which aren't solely in the nature of business assistance, mostly public health stuff, but it's still possible that we could see something like that rolling out in the future to try and support the business community. Here are just, my bio and Sai's bio. You'll have the presentation so you can review those. I'm primarily a healthcare corporate and transactional attorney. That's some of my background. Sai has been a corporate and commercial lawyer for many years, working particularly with a lot of overseas clients and growing companies. With that, we're really appreciative for your time and for everyone who showed up to this. We hope you found this useful. We hope that you're going to find in this, the information about the resources that you need to support your business, help it continue to grow in the months and years to come. So with that, we can, let's see, we've got one question or statement on the Q&A. Federal employer tax portion won't be included. So those federal payroll taxes are waived. Again, that's one of the employee tax credits that's provided along with the employee retention tax credit if you do not take a PPP loan. And so, let's see, we've got that. And Paul, I don't know, do we want to? That's the only question in the Q&A. Do we have other questions before we end? If not, again, oh, Paul.
Oh, yeah, sorry, I didn't know that my screen was here's the resource link for the presentation. I do have one question that came through. What happened if I had laid off people before the CARE Act came through because of my situation? Does it apply to the PPP? Can I apply for that, but I don't have people that are on my payroll right now? Can you answer that question? Because we had some people who are restaurant owners that had to basically, and retailers who had laid off everyone because of their cash flow.
Sure, that's a great question, and that actually is covered because I think these pieces of legislation do require some time to roll out, and so some people were already having to make business decisions very quickly when the government was moving more slowly. You can look backwards. The date for which you declare your payroll to get a PPP loan is not the date that the act passed or a date after it. I believe it's sometime in February or maybe the beginning of March. I can't remember the exact date off the top of my head, but you go back to that date. And as long as you promise that you will rehire those people for the purposes of having that payroll. So I had to fire people. They were out of work for 3 weeks, but I had a head count of, let's say I had a head count of 20. I'm claiming payroll costs for 20 people. I'm promising that I'm going to use those funds to hire 20 people. It doesn't have to be those same 20 people. It just has to be a head count of 20. Even if you go out, those other people moved away, found jobs, you hired other 20 people. So you're not pegging your payroll to the moment that you apply. You go back earlier before you fire those people. And as long as you promise and commit, and there will be sort of people checking up on you afterwards about this, to hire that same count of people again, then you'll be fine.
Okay. And one last question, does that pertain to people who are on quote unquote furlough?
Furloughed people, if you are, it's all about payroll costs. So, they're asking, what are your payroll costs? What is your head count? If you furloughed people and you're not paying them, then you can't count them towards your head count, towards your payroll costs. If you furloughed them, but you're still paying them, then you can count them. They still do count as part of your head count. So it's a question with more details than that. If you've really just let somebody go and you're not paying them, you still can go back to that previous date, but you can't take the PPP loan for them and then keep them furloughed and not pay them.
Okay, great. Thank you so much. I know for the sake of time, we probably have to close up the Q&A. Just last question. Tell me about your firm and tell the audience about your firm and what you guys what your law firm is about.
Great. Well, Seyfarth is a Chicago-based firm. It's been around for actually this year, as of this year, 75 years. We've been in Houston, I think, almost 30 years, 25 or 30 years. And, we're a full service law firm. So everything from litigation to transactions, which is primarily what Sai and I do. And the main bread and butter of the firm is labor and employment. So, you get sued by one of your employees, you want to fire one of your employees and not get sued. We're the people that you talk to. But, obviously we provide a variety of other services. My particular specialty is healthcare law. So people who are in the healthcare business, healthcare providers, entrepreneurs who, made a lot of money somewhere else and decided they wanted to plow it into healthcare. Those are the sort of people I talk to, navigating through the regulations and doing transactions and that sort of thing. Sai, did you want to add anything else?
I guess he is off the call. But hey, just want to say,
I'm still here. Yep. Yeah, I'm sorry. I think that I was having trouble with the mute button. I'll just add that we have a growing international footprint. We're also an international firm. We have offices in mainland China, in Hong Kong, and London. We service the Middle East, South Asia, Southeast Asia. So we definitely have a robust and deep international footprint as well. And so we have a lot of clients who are not only of Asian descent, but also have business operations in various parts of Asia and are very invested in Asia, going both ways. So we're here to help.
Yeah, and you guys have been a great supporter with the Chamber. Y'all were one of our big sponsors for the business conference last year as well, giving our keynote. So we're really happy and thank you for giving this wonderful presentation and being able to provide all these resources. Again, we'll be posting these presentations online with the resource they talked about on our website with the link that we sent out through the chat box and also on the slide here. Also, we want to let you know that we're having an upcoming webinar tomorrow, ACC membership orientation at 10 a.m. to learn more about the benefits that come with your membership. Next week, we'll have another webinar with our banking members that can give more clarity on the particular process and loan when we're working with banks. And also we'll hope to have someone from actually the Labor Department to give guidance on employers and employees. So please check out our website, www.asianchamber-hou.org for more information, as well as updated information on what we're doing. If you're not on our on our email blast, please sign up, as we want to stay connected. You can sign up on our website. And also on the top portion of the website, please follow us on social media. that allows us to connect and engage with you over there as well. Again, thank you for spending this afternoon with us. And please reach out to the Chamber if you have any questions. We're happy to help. I hope to see you tomorrow at our webinar, and we'll be ending our meeting shortly. Thank you for joining us. Thank you.
Yep, thank you.